The Schwab U.S. Dividend Equity ETF and the Vanguard High Dividend Yield Index Fund are among some of the most popular dividend growth ETFs out there. And in today's video, I'm going to compare them side by side and share which one I prefer, but also share why, depending on your circumstances, one or the other may be better for you than the other. So before I get into the video though, for those who don't know me, my name is Samuel Smith. I run the top ranked investing group on Seeking Alpha called High Yield Investor. And there I put together a portfolio of individual dividend stocks, as well as some CEFs and even some ETFs, and show how I do all my trades to build a dividend investing portfolio that yields about 7 to 8% and grows its passive income each year at a rate that meets and most often beats inflation over time. And also I've delivered a track record of the past 5 years since launching the group of beating the broader dividend investing sector, whether it be funds like SCHD or VYM or even high yield funds like DIV or SPYD. I've beaten it by about a factor of 2 to 1 per year in annualized returns. I've also beaten the S&P 500 over that period. So if you want to check it out, there's a link in the video description, but let's get into the video. So SCHD versus VYM, which one would you pick? Well, they both have their pros and cons. First of all, they both have a lot in common in the sense that they're broadly diversified. They're filled with blue chip dividend growth stocks. They have very low expense ratios of just 0.06%, which are among the very most attractive of the entire ETF space. They grow their dividend payout year after year after year, which of course makes them very attractive with dividend growth investors. And they have dividend yields that are meaningfully higher than the S&P 500s or the NASDAQ. So they've got that going for them. Here are where the key differences are though. VYM is generally much better diversified than SCHD is, and there are several ways to look at this. First of all, it has far more holdings with over 500 individual positions, whereas SCHD only has a little bit over 100. So it has over 5 times the diversification just in terms of number of positions. Addition, its top 10 positions, SCHD is highly concentrated in those with about 40% of its portfolio focused on those top 10 positions, whereas VYM only has about a quarter of its portfolio, give or take, in those top 10 positions. So again, VYM is still pretty well concentrated in its top 10, but not nearly to the extent that SCHD is. So it's not as much of a high stakes bet on those top holdings. Some other important differences are that VYM is generally better diversified across the broader sectors of the economy. It has more exposure to tech, including a large position in Broadcom, which is a leading AI dividend growth play, whereas SCHD does not have much exposure to tech and even less to AI-linked mega cap tech. It doesn't have a big position in Broadcom. Meanwhile, you have also a lot more exposure to utilities in VYM than you get with SCHD, which is another big pro for VYM right now, given that the utility space is really starting to take off. And you can see this in funds like the Reeves Utilities Income CEF has been performing very well recently. And that's largely because the AI boom is fueling a growth boom for utilities, since the need for electricity is soaring to fuel these data centers that are at the backbone of the AI boom. So that's a big consideration for VYM. They have a little bit over 6% exposure to that sector, whereas SCHD practically has no exposure to the utility space. So what does SCHD have more of then? Well, a big difference is that SCHD is heavily concentrated in energy. It's become its top position after reconstituting this past year. And so that's something that really is a big distinguisher about SCHD. When you're investing in them, you're really taking a big position in energy. And a lot of people don't realize that when they invest in SCHD. Now, I personally like energy. I have a lot, especially in the midstream space. Companies like Enterprise Products Partners, Energy Transfer, MPLX, and several other positions. And so I'm pretty heavily invested in energy. So I don't mind that at all, but that's something to keep in mind. And that makes SCHD a little bit more volatile because energy tends to be a bit more of a volatile sector due to the volatility underlying commodity prices of energy companies. And so that's just something to keep in mind when you're distinguishing between the two. And so what this all points to now is the fact that if you're looking for a one-stop shop, just buy, set, and forget dividend growth fund, VYM may be the better option for you just because of its broader diversification. You're not as heavily exposed to SCHD. In contrast, SCHD is probably best bought if you're willing to complement it with some. Now, it still can be part of a very passive investing strategy, but you want to complement it with some things. Perhaps a fund like QQQY or JEPQ or something similar to that. I can give you some mega cap tech exposure. I'm not a big fan of those covered call ETFs, but in a small amount for diversification purposes, they can serve a good use. And then of course you may want exposure to the utility space. So something like I mentioned, UTG, or a lower cost index fund like XLU, depending on your income needs and goals there. That may be a good way to do it. And you can still buy and set and forget those funds and maybe rebalance every so often, and you can do just fine. But that's just something to keep in mind as you choose between the two. Some other things to keep in mind though is that SCHD does have some distinct strengths over VYM, and this is why I prefer SCHD over VYM. It has about 120 basis points higher dividend yield right now. It has a much stronger dividend growth track record over time, and it has slightly outperformed VYM over the long term in the total returns department. So for those reasons, I think SCHD is a more compelling fund. Now you just need to complement it with some other investments, whether they be individual stocks, which is where I specialize, or just a couple funds to help round out the portfolio. I think SCHD can be a great pick. But again, VYM is a fine pick for those who just want that buy it, set it and forget it approach to buying one ETF, and you want that little bit of more income than you'd get, say, with the S&P 500. So there you have it. SCHD, VYM. This is a quick video. Just want to get this out there. Let me know your thoughts in the comments below. Which do you like more, VYM, SCHD, or perhaps there's another dividend growth ETF out there that you like more? Again, if you like the video, please give it a thumbs up. Subscribe to my channel for more content. Thank you so much. See you next time.